In this video, I will show you how to quickly and easily calculate your annual depreciation deduction for real estate. Now, I will link to a Google Sheet with this calculation in the description so you can follow that link, and I have a public Google Sheet that you can use to do your own calculation. It's very simple, and what you're going to do is split off the land value versus the building value, because only the portion of the value for the building is depreciable. You're not depreciating the land. Now, you can do this by looking at a property tax bill, and you can find that on a county assessor's website or even some consumer real estate websites. But you need to figure out how much of the total value of the real estate is allocated to land versus the building. And you're going to split it off here. And when you have these two numbers, it should equal the total value of the real estate or the purchase price. Now, in this scenario, I just have $200,000 for the land, $500,000 for the building, and this right here is going to give my annual depreciation deduction. That's it. If I change this number, let's drop it here, $400,000. You can see the total value should be $600,000. I have that in here. You don't have to do anything on this line 5. It's just to calculate to make sure that when you add the land and the building together, you're getting the total value so that it makes sense. It matches whatever you're paying for the property or what the current assessed value is. And then that portion allocated to the building is what's being depreciated over 28 and a half years. Every year on your Schedule E, this is the number that you're going to put as a deduction. I hope this helps. If you have any questions, please leave a comment. And again, look for the link in the description. Thank you.